What is happening, party people? It's your boy, Sean McLaughlin, at Options Sean on Twitter X. Today is November 9, 2023. This is the All-Star Options Jam session where we review any notable things, any notable happenings amongst the trades that we recommend in the All-Star Options service. So we're going to go through any trades that we've exited, either at a profit or a loss. We're going to go through any adjustments maybe we have made. And we're going to go quickly review some of the newer trades we've put on in the last week. But before we get into any of that stuff, of course, we have to start with the old disclaimer. Make the old lawyers happy. Everything we discuss here is for educational purposes only. We're showing you what we're doing with our money. And we hope that you learn something along the way. That's the goal here. The goal here is to just get better, right? So let's start, as we always do, at the high level. Let's take a look at the S&P 500. Boy, what a rally we've had in the past, I don't know, what, a week and a half now? I mean, boy, things were at dire straits down here at the bottom of this last red candle, right? I mean, everything was pointing to lower prices in the stock market. There was a lot of fear out there. The fear was palpable. VIX was spiking. Me personally, not that I was scared, but I was definitely not looking for any bullish trades to put on. No bullish bets. I wanted to be, if anything, I wanted to be selling premium, delta neutral. That's been my MO for the past 3 months. It has mostly served me well. It continues to serve me well, but the character of the market has notably changed in the last week. No doubt about it. The VIX story, or VIX picture, also tells the story. I mean, this is just a cascading declining of fear, basically. This is what the exit of fear looks like from the market. This is a visual representation of fear going bye-bye. People aren't afraid. Now, we can argue till the cows come home about what it is everybody was afraid of during this latest upswing in volatility. A lot of things to be afraid of, sure, right? I mean, a lot of headline risk, a lot of war risk, earnings was going on. Pick your poison. There are a lot of things to be upset about, but whatever it was that people were worried about collectively, that fear has been receding very noticeably, which has shifted my perspective on trades that I've been putting on over the past week. I am now starting to take risk again, starting to take directional risk. In this case, in our cases, bullish directional risk. But before we get there, let's just talk about some of the trades that we have exited since we last spoke. So first up is a iron condor, which is a delta neutral defined risk credit spread using options that we had in consumer staples sector ETF, ticker XLP. We got into this on October 20th, and let's see, I should do better at having these things queued up for you guys better before we go live. But we had sold this, I believe, for 64 cents, and we bought it back for 32. Sorry, we sold it for 72 cents back on the 20th. Bought it back today, this morning, at 36 cents. So we are out of the XLP Iron Condor at our profit target. No sweat. Never really threatened any of our exit parameters. As you can see here in this chart, 71 and 64 were our levels where we were going to take defensive action. Never had to. Things stayed right in the range, just the way we drew it up, right? Next up, I can't remember if we discussed this during last week's jam session, because we exited this trade last Thursday. I can't remember if it happened before we went live or if it was after we went live, but this was a short put position in TLT, the bond ETF that we sold basically right here at the lows on the 23rd. Sometimes it's better to be lucky than good, but we sold puts here. I think it was during that first green candle there is when we sold the puts, and we sold them for $1.20. We sold the December 80 puts, sold them for $1.20, and on the second, which was last Thursday, we bought them back at our profit target, which was half of what we sold them for. We sold them for $1.20, bought them back at 60 cents, washed our hands of the trade. Look, there could have been some more profits there, but those profits are diminishingly slow as those puts just get closer and closer to zero. I'd rather just take the quick money and move on. All right. Okay, so that's two trades that are good news. One trade that's bad news. Microsoft. Boy, Microsoft made me look like an idiot. Back on October 25th, I wanted to sell premium. This was back when stocks were selling off, not doing well, right? Microsoft had an earnings gap that brought this stock up here. It quickly, almost immediately sold that gap. This was back during the market sell-off. And to me, it just seemed like, hey, this stock is stuck in the mud. This is a great short premium candidate, a delta neutral candidate, where normally I would sell a strangle, which may have served me better in this case. Unfortunately, did not, because what I did is I was worried, like everybody else, except maybe JC. I was worried that that lower prices may be on deck again. When the market was selling off 2 weeks ago, boy, things look pretty bad out there. So I wanted to protect the downside. So I sold the strangle, meaning I sold the 360 calls and the 310 puts. Okay, but I also protected the downside by buying the 300 puts. All in, I collected 575 when I put that trade on. Well, for my mind, the unthinkable happened. I didn't think there was any chance in hell that Microsoft would go back and test highs given the market we were in 2 weeks ago. Well, the market has its own sense of humor, and market quickly and immediately proved me wrong. And my naked calls up here went in the money, and that's no bueno. That's no good. So we closed the trade yesterday on the 8th. It cost me 11 and change to get out, 11.75 to get out. So that's a loss. We booked the loss. We collected 5.75 on the way in, paid 11.75 on the way out. That stings, but we traded it small. The risk to our portfolio, at least the risk to my portfolio, was only not even 1% of my capital. So, at the end of the day, it's a loss just like any other. It sucks. Oh well, we move on. All right. Now, updated stops. We have a couple positions on, actually 3 positions that we've been in that have survived the downturn. Actually, no, just one that survived the downturn. The other two that survived the downturn. One is a newer trade. But Steel Dynamics, we've been in this thing for a while now. I think we got in back in, well, actually, I'll tell you exactly when we got in. We got in June, early June. And it's just kind of been going sideways for a long time, which has been frustrating. But it finally broke out last week or early this week. It's retraced a little bit, but I'm liking the way this thing is setting up. Lots to like about this position. We moved our stop up to 100. So we're in a January 100, 130 bull call spread. And so 100 is where our long calls are. That's where I'm moving my stop. I mean, if you look at this chart, this 100 looks like a pretty significant support level. Obviously, if we break 100, then all bets are off. This thing doesn't look good. We don't like it anymore. So we're moving our stop up to 100. It was previously at 96, I believe. But we're moving it up to 100. It's like I said, it's a bull call spread that we paid $10 for. Looking to sell this thing at 20. So I've got a resting order out there to sell it at 20. Maybe we get there soon. We will see. We shall see. But we've updated our stop in STLD if you're in that trade. Similarly, Adobe. We just moved our stop up in Adobe just a smidge. But boy, we got really tested. So we got into this thing on October 11th, right? And this sell-off, which is when everything else was selling off, it got pretty close to our stop loss level. It didn't get quite there. And I know a few of you in our online chat room, our private chat room, were hitting me up, asking me, hey, we still riding this thing? It's looking pretty ugly. And I felt it. I was with you. I didn't like it either. But you got to stick to our plan. You got to stick to the parameters that we set up. And our stop loss level was never hit. 500 was the previous stop loss level. It never got there. And we held. And look, we got rewarded. Now, does it always work out that way? No, of course not. Of course not. But the few times that it does, makes it worth it. I think this might be one of those cases. So this Adobe trade, we're long a June risk reversal. So we're short the 460 puts, long the 700 calls. We collected $1 to get in. So we have a net credit already built into this trade. And boy, we're going to let this thing ride. We would love to see it get back up to 700, and we're off to a great start now. Let's see if we could follow through. But for now, we've updated our stop. We've moved our stop up to 507. If we're below 507, We don't want to be in this trade anymore, especially considering we have naked short puts involved. All right, last up on the stop updates is DraftKings. DraftKings, another trade we've been in for a little while, since June 28th, since before I went to Asia this summer. It might have been the last trade we put on right before we left for Asia. But we are long, what are we long here? We're long some January calls. I'm sorry, December 35 calls. And boy, it had a nice little fake out back in mid-July that really got us thinking that we were onto something. And then the rug got pulled on us pretty hard. But we never got stopped out, never hit our stop loss levels. And our patience, just like in Adobe, is being rewarded. DraftKings has been ripping over the last few days. So we, like I said, we're long the December 35 calls that we paid $1.40 for. So we're in some profits right now. We're riding some open profits. Not a huge amount of profits, but profits are just getting started here at these levels. If this thing keeps going higher, our profits are going to start piling up pretty quickly. We're moving our stop up to 30. That's just below that recent gap. I believe that was earnings related. Seems like it was earnings related. Doesn't matter. That's where our stop loss is now. We're moving our stop up to 30. If DraftKings can't hold the 30 level, we're out. Otherwise, we're going to keep letting this thing ride. Well, we're going to let this thing ride at least for about 3 more weeks. Once we get to the December 1st, which is the month of expiration, again, these are December 35 calls. Once we get to December 1st, then it's time for DraftKings to put up or shut up. All right? At that point, I get real aggressive with my stop loss. If DraftKings is below 35 on December 1st, which is our strike, then I'm just going to close the trade out for whatever I can get. All right? Because when you're holding out of the money long calls that are approaching expiration, whatever premium is left in those calls, theta decay is going to more rapidly eat away at whatever premium is left as we approach expiration. So if we're below 35 and our calls are out of the money, I'm just going to cut the trade. If we're above 35 like we are now, then I just get more aggressive. Okay, I get more aggressive with my stop loss. I'm gonna continue holding it as long as I can, but I'm gonna trail a stop loss. It's, I use discretion. It's not very systematic, but I basically follow it with a 3 to 5 day low. I use the 3 to 5 day low as my stop loss level. Now, that doesn't mean I'll exit the trade intraday. I'll wait for it like I always do. I'll wait for a closing price. I want to see the closing price below my trigger. And if we get that, then soon after the market opens the next day, once there's liquidity there, I'll exit the position and get out. Define risk, right? So there's never any panic exit in trades like this. But hopefully DraftKings keeps following through and it'll work out for us. So fingers crossed on DraftKings. All right. That's it for all those trades. Now for the next few trades, I'll just quickly rip through the new trades we've entered since we last spoke. If you are an All-Star Options subscriber, you can get all the details on these trades, why we got into the trade, what strategy we're employing, where our risk management level is, where, if anywhere, we're taking profits. All that information can be found on the website. Go to the options members section on allstarcharts.com and you'll get all that information. If you don't have access to that, please shoot us an email at info@allstarcharts.com and we will get you hooked up. All right, so anyway, put 3 trades on since we last spoke, all of them directional bets. I'll bet you could guess which direction we're going. We're going long. So we got long, and since we last spoke, we got long Tesla, we got long Progressive Corp, ticker PGR, and we got long Uber. All 3 of these trades were long. Again, head to the website, get all the details. You can find it all there. All right, folks, this has been the All-Star Options Jam session. Thanks for tuning in. I'm your boy, Sean McLaughlin, at OptionsSean on Twitter. Like I said, if you have any questions about anything we discussed here, or if you want more information about getting involved in All-Star Options, shoot us an email, info@allstarcharts.com. Hope to have you as part of the community. All right, have a great rest of your trading day, a great rest of your week, and enjoy your weekend. We'll be back at it next week. Take care, everybody.